From the morning reading, Priceline gaps to new all-time high on earnings per share. The broad indices paused below record highs before President's address to Congress last night. The month ended with impressive momentum. The relative strength index on the S&P 500 ended February above a level of 70, considered overbought on a daily, weekly, and monthly time frame. It hasn't managed that impressive feat since 2013 and 1997 prior to that. The Dow Industrials were good, but utilities were better. The Industrials got all the attention in recent weeks given its record run of all-time highs, but utilities actually outperformed them this month. That's related to the defensive-led nature of the past few weeks. But when it was utilities in particular leading, it was less consistent of a signal. Investors have a record amount of debt. The latest New York Stock Exchange margin debt figures show a balance of $513 billion, a new all-time record. Still, the pace of growth in debt remains well below the growth in stock prices, unlike in 2000 and 2007. More troubling is that cash balances are also low, so the net worth or available cash has declined to a negative $200 billion. The only other time that has been negative was April through July of 2015. Another climb in stock versus money market assets. There is now 4.30 invested in stock funds for every dollar in money markets, up from 364 a year ago. The current ratio has been exceeded only by the spring of 2015. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:45 a.m. Mountain Time, and I am recording this in preparation for the market day, March the 1st, 2017. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and bounce over to the morning report. And at the time of this cut, futures were up, and across the board, all four of the U.S. broad-based indices are up, with the S&P futures up about 0.5%, Russell futures up about 0.75%, NASDAQ futures up about 0.5%, as is the Dow futures. Crude oil is also up about 1/3%. The euro is down about 0.5%, long bonds down about 0.75%, and gold down about 0.9%. China is up just over scratch, as is Hong Kong. Japan doing better, up about 1.5%, as is Germany. The United Kingdom's up over 1%. In terms of macroeconomic reports for today of note for the United States, we have core PCE price index, personal spending. We have FOMC member Kaplan speaking. Crude oil inventories. And then tonight, FOMC member Brainard is speaking, so keep all that in mind. Had such a long report for Wednesday, I don't have Thursday on here. In terms of current volatility conditions, things have moved up noticeably, though there's still historically low range. Short-term VIX at 11.89, skew still elevated, coming in at a 131.98, so that is in a warning status there. IV percentile still all in that lower third, but you'll notice they're quite a bit higher than they have been in most sessions of late. The S&P's at 22, the Russell 31, the NASDAQ at 14, and the Dow at 33. We had one of the indices with a standard deviation size move on a close-to-close basis yesterday, and that was the Russell, following the prior session with a positive 1 standard deviation move, then coming in yesterday with a negative 1 standard deviation move. Obviously, last night the news is the president's speech and the response to that, and that response has been decidedly bullish. The S&P futures, as you can see here, have broken out again. We had several sessions of doji-like price action and a relative resistance up here above, and clear breakout above that action. So this is a horizontal breakout at this point. We'll wait and see what the all market participants do when the cash participants come in. But certainly at this point, this looks like at least a gap and go at this point. So we'll see if that strengthens, or sometimes what happens when you get the big markets on these heavy overnight moves, they go sideways during the day, having pretty much already exhausted the move in the overnight session. So this is new news with expectations for the economy and especially certain industry sectors. So this is likely to be a pretty significant impetus for today. In the Dow also, very much like the S&P, broke out of a horizontal resistance area and is up strong and is approaching 21,000. It was not that long ago that we were marveling at the Dow hitting 20,000 for the first time. So things continue to be very strongly bullish on these short to intermediate term charts. On the NASDAQ, also breaking out, and perhaps less pronounced in a relative term to the Dow and to the S&P, but still new overnight all-time highs on the NASDAQ. And finally, the Russell. The Russell, of course, has been chattering back and forth of late. We've had the kind of perhaps false breakouts in that we've come back down into the area of the prior range, only to have this kind of flip-flopping back and forth. We're big up day, -1 standard deviation day, and then it was actually a +1 standard deviation day followed by a negative standard deviation day, which nullified this action, basically a bearish engulfing. But now we have at this point another huge update working on the Russell, though it's not quite gotten back to where it started from with yesterday's action. We'll see where this goes. Obviously, this day is not complete. But all this in the big terms is still just noise, just chattering back and forth on the Russell. So it is the least powerful index by any means amongst these four right now. In other markets, crude oil also in a sideways pattern, and nothing has changed with that. Gold is clearly quite bearish right now in a bit of a counter trend move from recent highs, 3 days in a row, and we're starting to get a Pearson's arrow to the downside. Looks to be some pullback activity going in gold right now. Though we continue to see these higher highs and higher lows, primary overall trend is bullish, but in the short term, you got a bit of a move going against that trend. In terms of the dollar does seem to be breaking out. We've got a cloud breakout, and we're up above recent horizontal resistance. So we've been talking about how we need to see the dollar kind of make a move, come out of this neutral posture, and then once that happened, we'd likely see the impact on crude, gold, and some of these other markets. And look at this. This is interesting. So bonds, after having played with the upper part of the triangle, has now broken through this lower part of the triangle. Now, I'm not super confident with this lower triangle line right now. It's not a lot of touches. It's a near touch here. So we basically got, 2 touches and a near touch. So the question is this really a symmetrical triangle, or is this a sideways consolidation pattern with similar highs and similar lows? One might even make a stronger argument that this is similar highs and similar lows, and I should have a line that basically comes across here and would have us still within this trading range. So the question is this a breakout to the downside, or is this still within the trading range? We'll know better if we start to trade below this 149 area. That would certainly give us better definition. So not real strong support line right here. The stronger support may be the horizontal support. So just kind of keep that in mind. Let's not make too much of this potential breakdown on bonds quite yet. But certainly it is of interest, and it's got our little antenna going. So we'll watch that. In terms of volatility, we did have a bit of a rise going into the president's speech, but at this point it's down below a 12 once again. So very, very low volatility, not a lot of fear out there in the market, and that has an impact on how we read the potential for big moves from a probability standpoint, either to the plus side or to the negative side. Okay, let's go ahead and go to the daily report, and there are some changes over here. First of all, at the top, the market trend intermediate term phase opinion, still market phase 4. That's extension patterns. That is bullish. And the 3 market timing signals that we follow, the first one from IBD is still a confirmed uptrend. That's a bullish signal. GMI index, a perfect 6 out of 6. That's still a bullish signal. And the stock charts decision point scoreboard is also coming in with some new long-term bullish signals. So we are just about to have the perfect stack. And it has been a very, very long time since we have seen this in agreement across all time frames, across all indices, and we're just one red arrow away from that at this point. So short term across all bullish, intermediate term bullish, and long term now bullish across all these. Now there's there's some mixed signals within this. So right now, it takes a lot, for example, to turn a signal on the long term up or down. You're getting some signals to where the intermediate term is weaker than it has been of late within this decision point scoreboard, and yet at the same time we're getting these new bullish signals on the long term. Of course, last night's news would likely solidify the bullishness if that follows through today on the short term. This is greatly improved, and certainly on the market timing signals, the consensus here is clearly bullish all the way across, with very, very few caveats at this point. That doesn't mean that we can't have a pullback, and indeed many would argue that we're overdue for something of a pullback, kind of shake out some of those weak hands and give an opportunity for those value buyers to be able to do their thing. And the market inhales and exhales on a regular basis, and we've not had much of an exhale of late. More likely, it's been more like shallow breathing at the best on any kind of exhale. So just because these signals continue to solidify doesn't mean that there can't be any downward action, and the market could take almost any excuse after such a huge run up since the post-election period to give a bit of an exhale. So both position sizing models are at 100%. Intermediate term market posture, exceptionally strong bull, and that is further supported by a strong bull sentiment line. And this is all before last night's action. If we kind of keep the pace through the rest of today, these should further solidify. You notice the first 3 are all up over 90. Very, very strong there. Russell has been deteriorating a bit of late. If it drops below an 80, it would drop to a weak bear. I don't expect that to happen with today's action unless something comes in and has a big reversal today. I expect that this will strengthen and in the next session or two if we have follow through. Hedge warning status remains 0+, normal with some elevated conditions. This is about as close to going to level 0 as we have been in months. So keep that in mind. So In terms of strategy opinions, no change since the last market preview. Still concerned about this VIX being well below the acceptable range to initiate new positions for novice traders. We are currently below that 12, and at that point, of course, premiums are a bit of a problem relative to the amount of risk that you're taking on. So for novice traders, that could be a bit of a problem. Cover call strategies, again, we're in extension pattern, so keep those considerations in the construction of your cover calls, perhaps a ratio of 1-to-1 of out of the money and in the money strikes, also a 1-to-1 ratio of high beta and low beta positions. Note that we've been talking of late about how many of the defensive sectors have been the more performing ones. One of the morning authors mentioned that this morning as well. So this should, be a signal to you that, don't just have a whole bunch of tech in your cover call strategies. Mix that up, throw some utilities and some of those lower beta positions in there, and you'll have a more consistent performance and probably be more in alignment with the current market condition. In terms of areas of specific warning, it's pretty clean over here. VIX did bounce up above a 12, and now it's back below a 12, so we continue to be, a weak warning there. We continue to have this warning with skew being a bit high, but other than that, this is pretty clean up here, so we're not going to get too excited about anything. Trend base also, everything is very nicely bullish there, nothing really to get excited about. In the key intermarket risk aversion indicators group, we do have all 5 as risk off, though they're marginally so, and we could really call this neutral with a slight bias to risk off. These have had a hard time separating themselves of late into any kind of strong signal to the bullish side or to the bearish side, the risk on side or the risk off side. So we'll note that they're all 5 in the current risk off, but they, in a couple good days, could easily all flip to risk on. They're that wrapped around each other. From a sentiment standpoint, intermediate term, a bit high, and you see the fear and greed index, is up here in the greed area, though not as high as it had been in, a week ago and so forth. From a sector specific, you see yesterday was actually a bit of a negative day, with the S&P down about 0.25%. And look at who's performing in that environment. Utilities up almost 1%. Consumer staples were positive. And that was about it for the positive yesterday. You also notice the breadth was pretty low. And then indeed, who were the worst performers? Consumer discretionary, industrials, telecom, and tech. So mostly a story of risk off and mostly a story of defensive being the stars of the day. Now, this is likely to flip today with a lot more risk on activity if we do get follow through on the president's speech. So in terms of market posture, take note of the extremes here. So, retail had gone up, 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 and then very quickly lost that and went back to down, down, down. Retail seems to be one of those first sectors. If there's weakness in the market, it's the first one down. So kind of keep that in mind. This is how you use sector-specific analysis. You note, who's kind of the driving forces. When you have up days, who leads that charge and who gives up the least when you have down days. And then when you have down days, who leads the charge to the downside? Well, retail is clearly that one right now. Energy and telecom also have been relatively weaker compared to some of the other sectors, whereas certainly some of the industry groups within healthcare have been showing quite some promise. Consumer staples, utilities, some of these more defensive sectors have also been relatively stronger of late in their market postures across all 3 time frames. And you see percent change here, and we start to take a look at recent performance. Look at this, utilities. The last month, up 6.45%. The last 5 days, 3.24%. So clearly something going on there. It'll be interesting to see what happens with that move in the next couple days given the president's speech. Consumer staples, another defensive sector, certainly also in there. Okay, we're right at 20 minutes. I think that's probably enough for today. Let's go ahead and wrap this thing up. And I'm going to move through these. If you see something of interest, just hit pause, and then also note hyperlinks where you can go for additional information. Disclaimers, as always, hit the pause button if you need more room to read the disclaimers. Also, note the full disclosures down here can be found at the hyperlink at the bottom of the slide. We'll be back next, probably Friday. We're going to do this market preview on a more irregular schedule, basically a couple or 3 times a week, and based on market activity. So if things are relatively quiet, will probably not be every single day. But certainly if we have significant market activity, significant changes to the stances on our reports, we'll certainly have a market preview out those days. But anyhow, bottom line, you ought to subscribe to the YouTube channel so that you get alerts when we do publish a new one. But all other things being equal, probably our next market preview will be out on Friday. In the meantime, be consistent, manage that risk profile, and good trading to each of you.